Hi everyone. Today I want to talk about self-managed super funds or SMSFs. I've had a few questions about this lately, so I thought I'd give you a no-nonsense, demystifying guide to help you understand what they are and how they work. The main reason why people use self-managed super funds is so that they have more control over the investment of their retirement savings. One of the main draw cards is the ability to invest directly in property. But before we get into that, let's have a look at the basics. First things first, an SMSF is a trust, but it's a special type of trust in that to be a complying super fund, it has to meet the rules of the Superannuation Industry Supervision Act, or for short, the SIS Act. Compliance with these rules enables the SMSF to access the same tax concessions as a public super fund. And just like a public super fund, an SMSF can receive employer super contributions, has income concessionally taxed, and will lock away the money until retirement age. So you can't access the funds or the assets of the SMSF until you reach retirement age and retirement conditions. Let me now just break down a few of the key terms that we need to understand. Firstly, the fund. That's the SMSF trust structure that will own the assets. Secondly, the members. They're the people, the individuals that will own a share of the assets of the fund. Thirdly, the trustees. They're the individuals or the company that will actually be the controlling entity of the fund. It makes the decisions on what the fund will do. It's important to understand that you can have individual trustees or you can have a corporate trustee. Whoever they are, whichever you choose, the members of the fund must be the trustees or the directors and shareholders of the corporate trustee entity. Some other key terms: accumulation phase. Now, the accumulation phase is the period of the fund during which you are building up the balance of the fund. During that phase, the income of the super fund will be taxed at 15%. Once you reach retirement age and meet certain conditions, you can then move your accumulation phase into pension phase. This is when the actual income of the fund will now be tax-free. So that's quite a significant tax benefit when you reach that phase of the fund. How do you set up an SMSF? Here's a basic process. Number one, get advice from a licensed financial advisor to make sure an SMSF is right for your circumstances. Number two, we set up a trust and a trustee structure. That's something that we can help with. Number three, you set up a bank account in the name of the super fund. Number four, deposit money into the fund, or you may roll over funds from an existing super fund. And number five, this is where the fun starts. You get to start investing based on your investment strategy. That could be in shares, in property, in managed funds, whatever fits your investment strategy. Now, let's talk compliance. It is essential to actually meet the compliance requirements of the SIS Act to ensure your fund remains compliant and that the concessional tax rates will apply to the income and the purposes of your fund. Firstly, you will need to engage someone like me to actually help you prepare financial statements and a tax return every year. Secondly, your fund financial statements will need to be independently audited every year. That is a requirement of the law. It is also really important to have very good record keeping. Don't throw any of those receipts out that relate to your super fund. All paperwork must be kept so that your super fund can be appropriately audited. As mentioned at the top of this video, investment in direct property is actually a real draw card for people wanting to use an SMSF. A couple of key features in this are that you can actually use an SMSF to borrow to help you invest in property, something you can't do in a public fund. The other thing is, if you invest in a commercial property and you run a business, your business may be able to lease that property from your SMSF. That has the ability to actually give you some really good cash flow and tax savings. If those things really interest you, please check out my next video where I'll unpack these things in a bit more detail.